Chinese e-commerce giants Shein and Temu are seeing a sharp decline in the US user engagement after the elimination of the de minimis tax exemption program. Temu's US monthly active users dropped 51% and Shein's fell 12% between March and June. Both the companies also slashed the US ad spending by over two-thirds. Temu has now begun shipping from the US sellers, and both the platforms are shifting the focus to Europe, wherein the app usage is rising. However, regulatory risks loom in Europe as well, with new import levies being considered by EU as well as UK. Hello everyone, welcome back to our channel and welcome back to this video. In this video, we wanted to share with you as to how Shein and Temu are facing setback in US as the trade barriers are rising and shoppers are pulling back. Two of the most disruptive names in e-commerce, that is Shein and Temu, are losing steam in US as the trade policies tighten, consumer engagement dips, and the advertising budgets shrink. Once considered invincible in their rapid rise, both the platforms are now facing their toughest challenge yet: a hostile regulatory environment and falling user numbers in their largest market. Let's start with the declining traction in US. Between March and June, Temu's US monthly active users fell 51% to 40 million, and Shein's users dropped by a milder but still notable 12% to 41 million. These declines coincided with a drastic cut in the US ad spending, Temu down 87% year on year and Shein down 69%. Both has slipped from the top 10 to outside top 60 in the US digital advertisers. As we all know, policy change is what is driving this shift. The current US administration's decision to revoke the de minimis exemption, which allowed packages for under $800 to enter duty-free from China, marked the turning point. The replacement, a steep 90% tariff on the direct-to-consumer shipments, later reduced to 30%, but still enough to disrupt the low-cost, high-volume business models. To adapt, Temu began shipping from the US-based sellers, a move that is signaling deeper localization but also logistical complexity. We are also seeing a pivot to Europe amidst the US decline. Now, as the US growth falters, both the brands are redirecting their focus to Europe. Temu's app usage surged in France by 76%, in Spain by 71%, and in Germany by 64%. Shein's monthly users also rose in UK, in France, and in Germany, and the range is from plus 13% to plus 20%. But Europe may not offer a safe harbor for long. The EU is planning a Euro 2 levy on smaller packages, and UK is considering ending its own low-value exemption program, echoing the US policy shift. This brings us to the IPO ambitions and regulatory headwinds. Shein had been getting in for a US or a UK IPO. Both are now stalled by regulatory resistance. Reports suggest that the Hong Kong listing is now imminent, though Shein declined to comment. So what can be said in terms of the strategic outlook? The days of frictionless cross-border e-commerce may be fading. With rising tariffs, shrinking user base, and uncertain IPO plans, Shein and Temu must reinvent themselves or risk stalling their global expansions. Whether their pivot to the local sellers or towards the European market still pay depends on how swiftly they adapt to a world wherein regulation, not just price, is going to be driving the competition. That's all that we wanted to share with you in this video. Hope you've enjoyed this video. Do stay tuned in for more. Thank you.